Now we're talking. Now that is what I'm talking about, guys. What a fantastic day today. I know a lot of you guys made some good money today, so well done on that. But now, back to focus here tonight. We got one more day left. I don't care how much money you made this week so far. Let's stay focused and let's finish up the week tomorrow. We got quad witching coming tomorrow. We got some big news in the schedule for tomorrow and possibly some melt up markets on our radar for tomorrow. Where do I start? I have so many trades we're tracking for tomorrow. And as always, I'm going to give you my roadmap, my favorite trades in the video tonight that will use a game plan to make some money on Friday. Before we jump in, though, and get the party going tonight, I'm excited just thinking about it right now. Before we get started, though, make sure you subscribe to our channel that we don't miss tomorrow night's video. If you like these lessons, if you enjoy these videos, as always, do me a favor, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, Joe. Let's get ready for Friday. Man, oh man, what a fantastic week. Starting off tonight, though, on the 60-minute time frames. Remember, I like to use the 60-minute to plan our trades for the following day. And then later on in the video tonight, we'll drill down to some tick charts. Tick charts make entries easier to time the perfect entry. So, got a lot we're going to cover in this video tonight. What are the 60-minute time frames telling us right now? There are three important clues right now on the 60-minute chart. First of all, nice, strong bull run higher here. We definitely got that squeeze we talked about in last night's video. We have ranges above us on both the Nasdaq and the S&P, and with tomorrow being a Friday, with tomorrow being quad witching Friday, the potential for a continuation and a melt up market is certainly on the table for tomorrow. So I want to make sure you know how to capitalize on that. But there's one big question. We are running into the underbelly of these ranges right now. This is usually pretty strong areas of resistance. We just finished off that beautiful pendulum swing off the range on the S&P. So even though the potential for the melt up is very good right now, we have to be prepared for a strong shot lower for things like a breakout pullback on the Emini or a strong shot lower off the low of a larger channel on the Nasdaq. So we've got to be prepared for both the melt up and maybe a two-legged correction or a two-legged pullback. Don't you worry, though. If you've watched these videos before, you know I will not leave you guys hanging. I'll give you guys a good roadmap to make some moolah no matter what happens here for tomorrow. Now, before we jump in, though, before we talk about the entries and the setups for tomorrow, we have a lot to talk about regarding the news calendar for tomorrow. There are four things tomorrow on a Friday. We're not on the weekend yet. First of all, consumer sentiment. Consumer sentiment is the big number that you're watching here for tomorrow. I know. There's news at 8:30. Now, the big news tomorrow, the market mover tomorrow is likely to be that consumer sentiment number, specifically the inflation expectations aspect of that consumer sentiment number. Second thing you want to be aware of, tomorrow is the third Friday of September every 3 months. Third Friday of the month is called quadruple witching. Expect markets to be lower volume. Expect markets to be a bit choppier than they normally are. That definitely sets things up for a possible melt up market. Third thing for tomorrow, the auto workers strike. It didn't look like the markets cared at all about the auto workers strike. It's going to happen at midnight tonight. It sounds like Biden's expecting it from this afternoon. So tough to tell how the auto workers strike will affect these markets, if at all. It hasn't been any impact on the markets right now, but it's definitely something we're watching for tomorrow. And the final thing, one of the most important things about Friday is mindset. Fridays are always the same idea. Early in, let it run. Early in, let it run. Get into trades early when the volume and liquidity is good. And because volume dries up, liquidity dries up into the afternoon, leave a little piece to run. I hope we get the melt up tomorrow. It could easily be one of those nice running markets. Early in, leave a small position open, and let it run, all right? So that's the mindset for tomorrow. Consumer sentiment at 10 o'clock. Quad witching. Hopefully it's not too choppy for us. Will the auto workers strike impact us tomorrow? Who knows? And again, the Friday mindset early in and let it run. Now, back to our charts, right? Because we know the news is, but you guys know this by now, the money is made on the charts. Let's go over now my favorite trades here on the S&P and the SPY, the Nasdaq, and the triple Qs. We'll start tonight off here, of course, on the 60-minute here for the Emini and the SPY. We'll finish up on the Nasdaq. Like I mentioned in the introduction, we are very bullish right now, and with these ranges above us, with Friday, with quad witching tomorrow, who knows, right? Not who knows, but there's a good chance here for a melt up continuation, and we'll definitely talk more about that tonight as we try to finish off these rotations. We've been talking about this all week, right? We're talking about this move all week here, so we're going to watch out for that melt up tomorrow. But again, we're running into key areas of resistance, so we do want to be prepared for what looks to be like a potential breakout pullback, right? If you guys watch these videos, you know, right? Anytime we see a range like this and we break out, breakout pullback. So we want to be ready for that as well here for tomorrow. Now let's drill down to our tick charts. You guys know this in our free trading classes, in our trade room. We like to use tick charts because tick charts, they just make everything easier. This is a 7,000 tick chart. You can see time frames in the upper left-hand corner, and that is the 21 EMA, the exponential moving average. If you're tuned in and watching this for the first time here right now, there are really two very important clues right now on the E-mini and the SPY, and these are quite different, by the way, than we have on the Nasdaq and the triple Qs tonight. So one of the rare occasions where these are pretty different. First one's a big move higher. That's a pretty big move today, right? We did a good job anticipating potential squeeze, and we certainly got that squeeze here for today. Anytime we see a big move higher, we don't want to buy high, ideally, right? We don't want to buy high. We anticipate what's called a two-legged pullback, okay, a two-legged pullback. Now, a two-legged pullback, in my free trading classes, we talk about these things called measured moves or symmetry. So imagine a measured move off the high. A two-legged pullback will usually go a little bit further than a measured move. And you can see that channel waiting down there. Okay, so that's one clue. Big move higher, two-legged pullback. I'd rather not buy high. But again, melt up potential for tomorrow. I got you covered. Next one is that range breakout. Okay, now remember, this area back here, right, is basically one big trading range. Go back to that 60-minute chart, right? Remember that? 60-minute chart. There's your range. That's the range we've been talking about all week here, it seems like, right? Up and then breakout, pullback, right? So we've got to keep our eyes on these prior areas, 43.5, 39 even. And you'll notice that lines up right around the same spot, right? So both of these clues are pretty much tipping us off to the best area here to buy that pullback. Now, let's get into it here. How do we make money off these ideas, right? It's one thing to know kind of what we expect tomorrow, but how do we make money off this? First of all, the melt up. Okay, if we continue to melt up, the name of the game will be bear traps. Okay, bear traps are the key. Remember, the market, if it melts higher, if we melt higher here, it's going to want to take out some of these big highs at 45.97. That's basically last month's high here. If we keep going higher, if we end up melting higher here, and again, the likelihood is they're pretty good, right? You want to think about those traps. Okay, this is a bear trap. Remember how this pattern looks. It's a higher high and a trap below that low. And as you guys learn in the free trading classes, you want to make sure you get that good, strong signal, right? That green candle closing firmly above the moving average. You guys are learning that in the free video course, right? So if we do end up melting higher, it's all about traps. Why? Because traps allow us to buy as low as possible. Now, let's talk about the two-legged pullback, because that's what everybody wants, right? Everybody wants a two-legged pullback. They want to buy the breakout pullback off the range. They want to buy that channel area. Okay, now, I know everyone's wondering, can I make money selling it on the pullback? You can, but what you want to think about is in order for me to short this top right now, all the momentum is bullish, right? We're all bullish right now with momentum. The only way to short this during the pullback is to use a bull trap ultimately, or a crown reversal. Now think about how this pattern looks, right? So during that two-legged pullback, right? Remember, two-legged pullback, think a measured move, think a symmetry move on the way back, a little bit more than a measured move, all right? While we're pulling back though, lower low in price and that trap high. Now, what are we always saying in our trade room? When you're going against momentum like this, these are not full-size positions. These are half-size positions. They're quarter-size positions. They're the bare minimum position. These are not the ones you load the boat on. All right. So as we pull back, right, anytime, as we pull back and we start seeing buyers try, the bull traps are where the money is made. But again, these are small positions, right? These are not full-size positions, okay? That's what I mean when I say sell bull traps on the pullback. Now talk about the two-legged pullback. Okay, so now as we're going lower, the two-legged pullback, and again, if we get a bull trap on the way down, again, think about that two-legged pullback, that measured move that kind of overshoots this, right, a little bit. Now, what's going to happen is once we run lower, that momentum now will start to shift for the sellers. This is where it gets fun, boys and girls, because as we get down into this area of support and all the bears, all the rookie bears start going, oh man, maybe it's a reversal. Good. Think like that. Once they get short on that pullback, now we get them trapped. Now we know exactly where their stops are, and we can use what I call a failure pattern, right? You guys learned this in the free video course, a failure pattern into a pullback combination, okay? A failure into pullback combo. So again, on the way down, think about that one leg, two leg. It's a little bit more, right, than a measured move. All that momentum now going lower, we assume these are rookies, right? Rookies on a fast time frame, on a minute chart, on a real low tick chart. We trap those bears in. We use their stops as fuel for a failure pattern. And then as it pops up, where does the market want to go? It wants to go back to retest the high, because anytime we see a strong move like that, a pull back and a retest of that high, on the way back to retesting that high, I want that first pullback. Right, I want that first pullback off that low. Now, this could be a pullback setup, like I'm showing you right now. It could also be a bear trap setup. Sometimes these things will go up, pull back, and you get that trap below that low. Right? Could be a trap pattern, could be a pullback pattern, but that failure into pullback combination. And remember, if you're watching for the first time right now, I teach, and I've got hundreds of examples of these setups inside of our free video classes. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link. Take that free trading class, because I'll tell you, the strategy you'll learn in that free video series will teach you a stupidly simple trick we'll use every morning in our members trade room to know exactly where the best winning trades are going to be each day. And to help you start making money, I'll teach you my 4 favorite entry patterns. If you are missing the best trades right now, if you're tired of taking so many losses, grab that link. Take that free course. It's perfect for someone trying to make the jump into full-time trading or add another income stream. And also, too, if you can't see that button that popped up there, I'll put all the important links for our free trading classes, our members trade room. I'll put all the links you guys need in the description of that video. All right, guys? So now that covers how to capitalize on that two-legged pullback. And again, right, the two-legged pullback, we'll see how far we can get it. Now, one very important topic we should be aware of for tomorrow is, what if we get a sharp pullback? Right? What if it really drops? You know what I mean? Because again, I'm hoping for a melt up tomorrow. That would be nice and easy. But remember, we're at a lot of resistance overhead. It's quad witching. We got some big news tomorrow. So let's be prepared for a really sharp pullback. A sharp pullback will oftentimes go about 200%. Remember, I mentioned earlier a measured move, right? So imagine if we go like 2 of those down. You know what I mean? Right? Kind of like a sharp pullback. If we see a real sharp pullback going lower, this is not a bear market now. Okay, when would it be a bear market? It becomes a bear market once they hold the pullback and roll it over, right? Remember, if we see a sharp pullback, all that does is get buyers excited, because now their risk and reward is even better now, right? Now there's a bunch more meat on the bone. What's the problem though? The problem is momentum, right? With all of that momentum going lower, the odds of another leg going lower are much better. This is where a 2-try failure comes in. We talked about the failure into pullback combination a moment ago. Now, if we see a sharp pullback, let those bears try once, Let those bears try twice. Again, when you see those sharp pullbacks like that, the odds of a retest and continuation are much higher because of the short-term momentum. So let the bears wrap that noose right around their neck. At least I'm not, a big fan of picking bottoms. It's difficult to know how far the market will pull back sometimes. So let it pull back, right? Less stress. It's easier. And then watch those bears get in as they climb higher. As it goes higher, bears try once. As it goes high, bears try twice. Once we got them, bam. Now we know where their pain is, right? See, now they're trapped. And once they're trapped and those bears get squeezed, what's going to happen? The sellers become buyers. One of my first mentors, one of my first coaches would always say, think about an area where everyone's a buyer. This is a scenario where everyone becomes a buyer. Why? Because anyone who sold short is taking profit at support, right? They're buying their way out. The buyers are buying low because that's what they do. They buy low. And when the rookies get trapped in here and they get smoked, they become buyers as well. Everyone is a buyer in these scenarios. These are the scenarios we will wait all day long for. Anyways, once those bears get trapped in, now watch closely. When we get squeezing these bears out, a lot of times you're not going to get that failure into pullback combo. All right, we mentioned earlier that failure pattern into pullback combo. Again, a lot of examples of those in the free video course I mentioned earlier. That would be ideal, but oftentimes when these bears get squeezed, this thing just rips, right? And it rips and runs higher. And when that happens, you get stuff like this, right? You get stuff like this where it jams up, shallow pullback, higher high, and right below that low are what? Traps, baby, right? So right there, again, think about that deep pullback, trap those bears in with, I use the word trap quite a bit, right? But trap them in below the moving average, 1, 2 for a 2-try failure. And if you see it start to sprint, if it starts to snap and run higher, don't chase it. Higher high in price, trap low. If it snaps up like that, right? Higher high in price, trap low. And this one's pretty easy because you'll know exactly where they want to go. They want to go back up to retest that high, okay? A sharp pullback. Think about a two-legged pullback that kind of overdoes it, right? Overdoes it. And I realize I'm being kind of general in these videos. We'll know more about this in the trade room once we see it. The final one, right? The final one here is a V bottom. Sometimes what happens is sometimes these things sharp, right? They go sharp low and then right back up again, all right? In other words, you don't get the chance to trap the bears in. Right? Sometimes you just don't get it, right? Sometimes all you get is that V bottom, which could easily happen here for tomorrow. And so if we do get a V bottoms are pretty easy. You want to buy a V bottom with basically a pop and grind. What will happen is it'll pop back up and begin to grind and grind and grind higher. When that happens, simply draw a trend line off the highs, mark it off that low. Okay, these can be pretty steep sometimes. Look left, find some prior swings, and then really you want to grab whichever entry pattern you can find. I like traps. You guys know that about me by now, right? A trap below a prior swing. It could be a failure pattern, a pullback combo. The key is don't miss that first pullback, right? While the rookies are chasing into it and they get stopped out, right when the rookies get stopped out chasing it higher is where professionals are going to come in. You see one right here, right? Pops up, grinds higher, right? And of course we're going in and buying it right back up right from there. All right, so watch those, right? Watch those popping grinds as we go higher. All right, so now we know how to make money on this if it melts up. If it melts, remember, if it melts up, it's all about traps on the way higher. And then you got to think, once we start getting up here, right, then we start thinking, okay, there's that two-legged pullback, and we kind of just reassess the situation from there, right? It's going to rinse and repeat. Basically use the same exact strategy we talked about to keep going higher here. All right, guys, prepare for the melt up, but also ready for that deep pullback. And again, on a move like this, we hope we get that nice, sharp, deep pullback because, again, it puts some more meat on the bone. All right, how about some NASDAQ here right now? By the way, what do you think about these videos? Do you like these videos? Can I make these any better? I would love to know some feedback in the comment section. Got a lot of new viewers here this week. I know I cover a lot in these lessons, but remember, I break it down into a lot more digestible pieces in our free trading course. Over the NASDAQ, and again, I would love to hear from you down in the comment section. On the NASDAQ right now, 60-minute chart, same basic idea, right? We're bullish overall. We get that range overhead. Nobody should be surprised if we keep going and going and going on relatively low volume tomorrow because of quad witching on Friday, right? So nobody should be surprised if we melt up going higher. But at the same time, though, we're at the underbelly of a trading range. And as you've seen previously, there can oftentimes be a lot of bears at the underbelly of a trading range. So be ready for the melt up, be ready for the sharper correction. Now, I mentioned earlier, the Nasdaq is quite a bit different, you'll notice, than the S&P. The S&P had that big squeeze and that run higher here today. On the tick chart right now, this is a 4,000 tick chart, you can see in the upper left-hand corner. It's different, but you'll see. There are three components here on the Nasdaq that are kind of tipping us off to the best way to make money on it. First one is a bullish trading range. It's pretty simple. It's a pop up, right? Bull market up into a trading range. Now, if you've learned one thing this week, I hope you know how to trade a bull range. We saw one right here, right? Look at that right there, right? We talked about this last night, right? Bullish range, what happens? We buy at support below it and we rotate higher, right? Same idea. Bullish range, we find support levels below it, right? We wait for, because of course ranges act like magnets. Ideally you want to break down and up, right, and go back up. So I like that area right there. That's what bullish ranges tell us. Okay. Now think about too. There's also that big range above us. So again, the melt up situation is definitely in the cards, or potentially in the cards for tomorrow. If we do break out higher, breakouts can be tricky. Right? There are two specific entry patterns we'll talk about tonight on a breakout going higher if we do get that melt up. All right. Now, next thing is that previous range breakout. What does that mean? Well, remember earlier today, we had a range. And what do we always talk about when it comes to ranges? Breakout pullbacks, right? Ranges love to wind up below, break out, and then what? And then pull back. Okay, we talk about breakout pullbacks quite a bit on these videos, and so we have to think that lines up nicely with the range overhead, and then again the major resistance. So the major resistance overhead is kind of the big variable right now. It's the wild card, if you will. The major resistance requires me to make small adjustments to the entry techniques, and you'll see what I mean here in a moment. So if we go higher here, right, getting ready for the melt up. Now, if you guys have watched these videos so far this week, you probably know the answer to this, right? When we have a range like this, we're expecting that breakout pullback, right? That breakout pullback. There's money to make on the way up, right? There's a little more aggressive money to make on the pullback, okay? And there's money to make on the breakout pullback. Okay, you guys, a lot of you guys probably know this. If not, first time, here's how it works, right? As we're going higher, we want to buy as low as we can, right? As we go higher, we want to buy as low as we can. How do you buy low? You buy low with a bear trap. Again, strong pop up, higher high in price, and a trap, right? And a trap, okay? That's how you get in as the market, right? As the market goes higher. You let it run up, shallow pullback, higher high, and you go looking for that first signal right off the moving average for that trap. Okay, pretty simple idea there. As we go higher, we're looking for bear traps, right, going higher. Okay, now on the pullback, how do you time a pullback in a bull market? Very carefully, right? Very carefully. Remember, half size position, quarter size position. We're all bullish at this point. Okay, so picking tops it's a gamble. It's a gamble. That's why you go half size, quarter size. And remember, we have to assume these buyers are going to try to keep this thing going until they take out those big highs we saw on the 60-minute. So we have to get some proof the buyers are struggling. They try once, they try twice. This is that crown reversal pattern we talked about in last night's video quite a bit, right? As we go higher and we pull back, buyers try once, buyers try twice, and we see a crown reversal. Okay, I'm not making these things up. We see this pretty much every day during pullbacks. Okay, so think about as we pull back. Now remember, we're not picking the top, right? We're not picking that top. We're not guessing when that top happens. We may not get that signal. Okay, you wait for the proper signal, you'll get rewarded by the patience there. It won't happen every day. And again, want that close from below that moving average. You'll learn more about the signals in that free trading course. Okay, then now we pull back right to the high of that range. What do? You trap the bears in, right? You pull the rug off underneath them. When it pulls back like that, and all the rookies say, oh, shoot, it's a reversal going lower. Good. Yes. That's exactly what I want you to think. Get short off that moving average, and let's use that failure into pullback combination, okay? Memorize this dance. If there's one dance you learn as a trader here tonight, this is it right here. It's the breakout traps. It's the crown reversals, right? Remember, lower low in price, trap high, lower low in price, trap high, right? And then, of course, over here, right, it's a breakout pullback. All that momentum going higher, they're going to take out that high, right? Don't fall for those pullbacks. Don't fall for in a bull market. Don't fall for those pullbacks. Once they get short, their stops are going to get lit up, right? So as we go up, it's those traps on the way higher. It's that crown reversal for the short. Get in underneath the moving average. This will probably also be a channel right off of that high, you know what I mean? Not going to hurt. Trap the bears in. Failure into pullback. Squeeze back up, right, to retest the high. Okay, those are the ways you trade a breakout pullback, especially with some resistance up overhead. Now let's talk about the pullback style. Okay, everybody wants the pullback right now. What's the problem? Overhead resistance. Right? That's the problem. So on the S&P, right? The S&P had such a big move, right? It was such a big move higher on the S&P that any deep pullback will likely be seen as a buying opportunity, right? The Nasdaq does not have that, okay? You can see it, right? This is not the same situation as the S&P. So on a pullback right now, there's not as much momentum for the buyers, right? The Emini had this huge move. So any pullback is attractive, right? Not so much on the NASDAQ. So what am I concerned about? I'm concerned that this level of resistance, they're going to try to rotate this back down to these lows, right? Because again, we can't assume there'll be a lot of buyers waiting right there. Okay, we can't assume that. Now, first of all, while we're going lower, right? Everybody wants to know, how do you make money during that pullback? You know how to make money on the pullback, right? We mentioned it earlier. You have to sell with bull traps on the way down. Remember, this is a half size position, a quarter size position. So if you're wondering how do you short this thing off the high to make money, you do it that way, right? You wait for the price to go lower, low, and grab that trap so you're selling as high as you can. Okay. Now, how do you buy it down here? What's the problem? The problem is we got resistance, right? We got too much resistance up overhead. And as I said earlier, we don't have that momentum that they have on the S&P. So as we pull back, we need to trap in the bears and literally use their stops as fuel to run back higher while we try to buy as low as we can. This is a relatively rare situation. What you'll need, though, is this pattern. I call it a two-try trap in this example. It's basically a crown reversal, right? Remember, we're running into resistance. We don't have all of that big momentum that the S&P has right now. We're concerned about this thing rolling over and taking out some of these lows here because of that major resistance up overhead. So we need to, A, trap the bears in and use their stops to fuel this move higher, right? Classic failure pattern. However, because we don't have that big move like the S&P has, because we're running into resistance, we want that bear trap. We want to buy as low as we can. Okay, that's what I mean when I say buy a pullback with a two-try trap. Okay, the other variation of that would be it rolls lower, it pops back up, and we get one of those pop and grinds, right? And then we go in for a trap off the pop and grind, right? But the bottom line is, we want to buy as low as we can here. Okay, and the reason for that is because of that overhead resistance and that lack of just huge move that we saw on the S&P. Deep pullback with a two-try failure. We mentioned this earlier on the S&P, right? So if this thing just tanks and runs lower, it's not a bear market yet, but it is a very bearish short-term momentum. In these situations, what do? Sharp move lower into support, below that trading range, this is a very attractive situation, but momentum is a challenge. So let those bears, remember, it's not a pullback like this, right? It's not that pullback, right? It's twice as big as that pullback. By the way, that is a two-legged pullback. Think about that again, right? There's one leg, there's two leg, a bit further than that 100%. Okay, anyways. So as we go lower here, we rope those bears in. Now, in this situation, we have a ton of reward available. So we don't need a trap. Does that make sense? Okay, I don't need that trap right here. I need that trap right here, though. You need that trap low right there because you're buying too close to resistance. And I'm sorry I repeat this, but this is really, really important. This will keep you out of so many losses. So trap when you're worried about buying too high, relatively speaking, strong rune down. I'm not so worried about the location. I'm worried about momentum now. Bears once, bears twice, trap them in. And remember, these will oftentimes run and sprint, right? Because everybody gets caught off guard. Everyone's roped in. The bears get squeezed. The market rips higher. Don't chase it. Don't chase. Don't chase. Higher high in price. Professionals are waiting right there for that trap entry going higher. You know where it wants to go, right? Let's go back up to retest it. In the event that it rolls lower and retest that low, same idea, right? Same idea. 1, 2, trap them in and back up from there. All right, guys? That will give you a good game plan for tomorrow. Tomorrow's a Friday. Early in, let it run. Early in, let it run. Hopefully quad witching isn't too bad to us tomorrow. It's always kind of a question mark. We just don't know how it'll act here for tomorrow. That's okay though. The game plan is put together tonight. We're going to finish strong tomorrow. Don't forget, I'll put all of the important links, all the free class links, all the trade room membership links, all down in the description of the video. If you got questions, don't be a stranger. I'm always here to help. Megan and I are always here answering calls and answering questions. So if you have trouble or you have questions, don't be afraid to call the office or use live chat as well. If you need help, we're here to help every step of the process. All right, I'm going to rest my voice. What a great week we've had this week. Have a great rest of your evening. Hopefully I'll see you sometime soon in the members trade room at 8 o'clock Eastern time. In the meantime though, if I don't see you guys tomorrow morning, we're going to come back next week. We're going to keep this party going next week. We are just getting warmed up here in the month of September. Guys, my name is Joseph again. Thank you so much for watching. Thank you for watching all the way to the end. Get out of here. Enjoy your evening. Be well. Be nice to each other out there. And you better be here next time. Adios, amigos. Bye-bye for now.